There's a form sitting inside the Canada Revenue Agency system right now that could hand you a check for $5, $10, even $20,000. Not a loan, not a new benefit you have to wait years for. Money you already earned the right to, going back as far as 10 tax years, Joe, that nobody at your bank, your accountant's office, or Service Canada is going to call you about. It's called the Disability Tax Credit, and before you turn this video off because you think I'm not disabled, that doesn't apply to me, stay with me for the next 2 minutes because that assumption is exactly what's keeping thousands of Canadian seniors from money that's rightfully theirs. So let me tell you about a man named Walter, 71 years old, retired machinist from Hamilton, Ontario. Walter has arthritis in both knees so bad that walking to the mailbox takes him nearly 5 minutes, and stairs are something he plans his whole day around. For years, Walter never thought of himself as disabled. He thought of himself as just getting older like everybody does. It wasn't until his daughter mentioned this exact credit that Walter applied and found out he'd qualified for the past 7 years without knowing it. His retroactive payment came in at just over $11,000. Walter isn't rare, he's typical, and that's exactly the problem this video is going to fix for you. This credit was never designed only for what you picture when you hear the word disability. It covers slower walking. It covers hearing loss that makes conversations exhausting. It covers memory issues, vision changes, and the hours you spend every week managing a chronic condition through medication, therapy, or dialysis. If your body or mind has changed in ways that make daily living harder than it used to be, this video is for you. And later on, I'm going to walk you through the exact 3-step process to apply completely free. And I'm going to warn you about a scam that's been draining thousands of dollars out of seniors' pockets across this country. So don't skip ahead. Let's start from the beginning. What exactly is this credit? Point number 1, what is it? The Disability Tax Credit, the CRA shortens it to DTC, is a non-refundable tax credit that reduces the amount of income tax you owe because you're living with a condition that markedly restricts your ability to do everyday things. The application form is called the T2201, and once the CRA approves it, that approval doesn't just apply going forward. It can apply to years you've already filed. Here's the part almost nobody explains properly. The CRA doesn't require you to have a diagnosed disability in the way we normally use that word. Their own criteria include things like walking. If it takes you significantly longer than an average person your age, or you need to stop and rest hearing. If you struggle to understand speech even in a quiet room, even with a hearing aid vision, even with glasses or contacts, if your eyesight falls below a certain standard memory and thinking, including diagnosed cognitive decline or dementia-related symptoms, life-sustaining therapy, if you spend at least 14 hours a week on things like dialysis or insulin management, if any one of those sounds like you or like your spouse, this isn't a stretch. This is exactly who the CRA built this credit for. There's also something called the cumulative effect rule that almost nobody outside of a tax specialist's office ever hears about. Here's what it means for you. Maybe your hearing isn't bad enough on its own to qualify. Maybe your walking has slowed down, but not dramatically. Maybe your memory has gotten a little foggier, but not enough to worry your family. Individually, none of those might meet the CRA's threshold. But when your doctor looks at all of them together, hearing, walking, and memory combined, the CRA can approve you based on the combined restriction on your daily life, even if no single condition would have qualified by itself. This one detail alone disqualifies thousands of seniors from applying simply because they never knew it existed. They read about one condition, decided they didn't meet the bar, and gave up. Don't make that mistake. What is it worth? For the 2024 tax year, the federal-based disability amount was worth over $9,800, and seniors over 18 can also claim a supplement depending on your situation. When you add provincial credits on top, because every province has its own disability amount, a single approved year can lower your tax bill by $1,500 to $3,000 or more, depending on where you live and your income level. Now here's where it gets serious. How do they get it? I'll give you the full step-by-step walkthrough later in this video because I don't want you writing down half the instructions and getting confused. For now, just remember the form number, T2201. Write it down. We're coming back to it. Now, I know what some of you are thinking. If this is real, why hasn't my accountant mentioned it? Why hasn't Service Canada called me? Here's the honest answer. This credit is self-reported. The CRA doesn't go looking for people who qualify. You have to apply. Accountants often only ask about it if you bring it up first, because most tax preparers are focused on the current year's return, not digging through a decade of your medical history. That's not a scandal. That's just how the system is built. which means the responsibility and the opportunity falls on you. The part most seniors never hear about, going back 10 years, point number 2. What is it? This is the piece of the puzzle that turns a modest yearly tax credit into a life-changing lump sum. When the CRA approves your T2201, they ask you, right on the application, to specify the year your condition began markedly restricting your daily life. If your doctor confirms that your condition existed 5 years ago, 7 years ago, even 10 years ago, the CRA will let you request what's called a reassessment for each of those prior years. That means you're not just getting next year's tax credit, you're getting every single year you qualified for retroactively added up and paid out, often as one direct deposit. What is it worth? This is where the real numbers come in, so let me be specific instead of vague. Say a 68-year-old widow has had significant vision loss for the past 8 years but never applied for the DTC because she assumed it was only for younger people with severe disabilities. Once approved, the CRA can reassess each of those 8 years. Depending on her income and province, that could mean roughly $1,200 to $1,800 recovered per year, which adds up to $9,600 to $14,400 in a single retroactive payment. For a married couple where one spouse has been managing a heart condition requiring extensive treatment for 10 years, and the working spouse has enough taxable income to use the transferred credit, that retroactive number can climb past $20,000. I'm not telling you every senior watching this will get $20,000. I'm telling you the range is real, it's documented, and the only way to find out your number is to apply. Now let me address something important because it changes the math for a lot of you. What if you're retired, living mostly on CPP, OAS, and a small pension, and your taxable income is too low to make full use of the credit yourself? This is where the transfer provision comes in. If you have a spouse, common law partner, or even a supporting adult child who claims you as a dependent, the unused portion of your disability tax credit can be transferred to them. That means the tax savings don't just disappear because your own income is modest. They can flow to whoever is supporting you financially, which often means more money staying inside the family instead of going to the government. Take Doreen, 74, from a small town outside Regina. Doreen's income is low enough that she pays almost no federal tax on her own. On paper, you might think the disability tax credit wouldn't help her much. But her son, who supports her and claims her as a dependent on his return, was able to use her approved DTC and the retroactive years attached to it, resulting in a refund on his own taxes of just over $7,300. Doreen didn't lose a cent of value just because her own income was low. The credit found its way to where it could actually be used. How do they get it? You don't need to file 10 separate amended tax returns yourself. Once your T2201 is approved, you simply notify the CRA that you want prior years reassessed, and they adjust automatically based on the returns already on file. I'll show you exactly where to click for this in the step-by-step section coming up. This is the question I get asked more than almost any other, so let's deal with it head on. The disability tax credit itself does not count as income. It's a tax credit, not a payment added to your earnings. So claiming it will not push you over the income threshold for old age security clawback, and it will not reduce your guaranteed income supplement. If anything, as we're about to cover, it can help protect and even increase other benefits you're already receiving. The hidden ripple effect nobody talks about, point number 3. What is it? Getting approved for the DTC isn't just a one-time refund. It's a key that unlocks eligibility for other programs and credits that are tied directly to disability status. Some provinces increase their own tax credits once you're approved federally. Approval can also open the door to the Registered Disability Savings Plan, which comes with government grants and bonds worth thousands of dollars over time for lower and modest income seniors. And in some cases, it affects how much you're able to claim for medical expenses and caregiver amounts if a family member is supporting you. What is it worth? Depending on your province, provincial disability credits can add several $100s a year on top of the federal amount. If you're eligible for the Registered Disability Savings Plan and your family income qualifies for the Canada Disability Savings Bond, the government can contribute up to $1,000 a year with no personal contribution required at all, and that's on top of matching grants if you do contribute. How do they get it? The starting point for all of it is the same. Get your T2201 approved first. Everything else becomes available to you automatically or through a short follow-up application once that approval is on file. The credit most people stack on top of this one, point number 4. What is it? Once your disability tax credit is approved, a lot of provinces and even certain federal programs treat that approval as proof of eligibility for other things, including credits for home renovations that make your house safer to live in as you age. Grab bars in the bathroom, a walk-in shower, a stair lift, a wheelchair ramp. These are exactly the kinds of costs that get significantly easier to claim once the CRA has you on file as DTC approved. What is it worth? Depending on your province and the specific renovation credit available to you, seniors have claimed several $1,000s back on accessibility renovations in a single tax year. Combined with your DTC retroactive refund, some seniors have used the lump sum from the 10-year reassessment to actually pay for the very renovations the credit helps offset, turning one approval into a home that's safer for the next 20 years. How do they get it? Once your T2201 is approved, check your provincial revenue website or ask directly through CRA My Account which renovation and accessibility credits you now qualify for. Keep every receipt for accessibility-related home improvements going forward because that documentation is what makes the claim possible. Yes, and this is worth being upfront about. Every province sets its own disability amount and its own renovation or accessibility credits on top of the federal program. Someone in Alberta and someone in Nova Scotia applying with the exact same medical condition could see slightly different dollar totals once provincial credits are factored in. That's not a flaw in the system. It just means your specific number depends on where you live, which is exactly why applying and letting the CRA calculate your actual numbers matters more than guessing based on someone else's story online. Now I need to stop and talk about something that genuinely upsets me because I've seen it happen to people who couldn't afford to lose the money. The scam targeting seniors. With this exact credit, warning section. There are companies, some of them advertise on TV, some of them mail glossy letters that look almost official, that specialize in helping seniors apply for the disability tax credit. They'll call you or you'll see their ad, promising to handle the whole process for you. Here's what they don't lead with. Many of these companies charge 30% to 40% of your entire retroactive refund as a fee. So if the CRA approves you for $15,000 going back 8 years, you could end up handing over $5,000 or $6,000 of your own money to a company for filling out a 2-part form. That is not illegal in most cases, but it is completely unnecessary. Applying for the T2201 costs nothing when you do it yourself. Your doctor fills out one section, you fill out the other. The CRA processes it exactly the same way whether a $6,000 fee was paid to a middleman or not. There is no special access these companies have that you don't. Watch for a second red flag too. Some of these companies ask you to sign a form authorizing them as your representative with the CRA, which means your refund gets deposited to them first, and they send you what's left after taking their cut. Once that authorization is in place, it can be a hassle to undo, and you've lost control of when and how you receive your own money. If anyone asks you to redirect your CRA refund to their business account before it comes to you, treat that as a serious warning sign, not a convenience. If you take one thing away from this video, let it be this. Never sign a contract that hands over a percentage of your refund before you've even tried applying directly. Talk to your doctor. Use CRA My Account. It costs you nothing but a bit of paperwork, and every dollar the CRA approves stays in your pocket, not a stranger's. I know some of you are sitting there thinking, my hearing isn't that bad, or I can still walk, just slower. Let me be honest with you. You don't get to be the judge of that, and neither do I. Your doctor and the CRA make that determination based on medical criteria, not on how tough you think you need to be about your own health. I've seen people talk themselves out of applying because they didn't want to seem like they were exaggerating their condition. Let the professionals decide. The worst outcome of applying is a no. The worst outcome of not applying is leaving thousands of dollars on the table that you'll never get back once too many years have passed. Your step-by-step application guide, the action plan. Let's make this practical. Grab a pen if you need to because here's exactly what to do. Step 1, start Part A of Form T2201, log into CRA My Account. If you don't have an account set up yet, it's worth the 20 minutes it takes to register. You'll need it for this and for a lot of other benefits going forward. Inside your account, you can begin the Disability Tax Credit application digitally. This is Part A, and it asks for your basic information. If you'd rather not do this online, that's completely fine. You can download the paper T2201 form directly from the CRA website or call the CRA and request one be mailed to you. Either version works exactly the same way. Step 2. Your doctor completes Part B. This is the medical section. Once you've started Part A, the CRA generates a reference number that you give to your doctor, nurse practitioner, or relevant specialist. For example, an audiologist for hearing or an optometrist for vision. They log in separately or fill out the paper section describing how your condition affects your daily life and, importantly, how long you've been living with these restrictions. This is the piece that determines your retroactive years. Be honest with your doctor about how long you've been struggling. If it's been 8 years, say 8 years. This is not the time to downplay your health for the sake of modesty. A quick practical tip here: bring a written list to your appointment. Doctors see dozens of patients a day, and a rushed 5-minute conversation can lead to a rushed, thin answer on the form, which is one of the biggest reasons applications get denied. Before your appointment, sit down and write out specific examples. How long it takes you to walk to the end of your driveway, how many times a week you ask someone to repeat themselves, how often you've missed taking medication because you forgot. Specific, concrete examples give your doctor exactly what they need to fill out Part B properly, and it takes the guesswork off their shoulders. Step 3. Submit and request reassessment. Once both parts are complete, the form gets submitted to the CRA either electronically or by mail. Processing generally takes a number of weeks, so patience matters here. Once you receive your approval letter, that's your green light. At that point, contact the CRA, either through My Account or by phone, and specifically request that they reassess your prior tax years based on your new disability approval. You can go back up to 10 years, provided you were eligible during those years. The CRA will handle the recalculations on their end using the returns you already filed and issue a retroactive payment once everything is processed. That's it. 3 steps, no fees, no middleman. Just you, your doctor, and the CRA. If your application comes back denied, you're not automatically out of options. You can request a review, and in many cases, a more detailed letter from your doctor explaining the daily impact of your condition changes the outcome. Denials often happen because the form was filled out too briefly, not because the person didn't qualify. Don't assume one no is final. Ask your doctor to be as specific and thorough as possible if you need to reapply. Bringing it all together. Let's recap what we've covered, because there was a lot here, and I want you walking away from this video with total clarity. The disability tax credit isn't reserved for the most severe cases. It covers walking difficulties, hearing loss, vision problems, memory issues, and time-intensive medical treatments, conditions that are common among Canadians over 65. If you've been managing something like this for years without applying, the CRA allows you to go back up to a decade and recover thousands of dollars in a single retroactive payment. That approval can also open doors to provincial credits and savings programs worth even more over time. And the entire process, from Part A to your doctor's Part B to final submission, costs you nothing if you go directly through CRA My Account instead of paying a company 30 or 40% of your own money. This isn't a loophole, it isn't a trick, it's a benefit that already belongs to you, sitting unclaimed because most people never learned it applied to them. Think about Walter for a second back at the start of this video. 7 years of arthritis he just accepted as part of getting old. $11,000 sitting in a government system, waiting for a form that takes less than an hour combined between you and your doctor. Think about Doreen, whose low income almost convinced her this credit wasn't built for someone like her until the transfer rule proved otherwise. These aren't exceptional cases. They're proof that the system works exactly as it's supposed to once someone actually applies. The biggest risk here isn't filling out the form wrong. It's not filling it out at all. If this video helped you understand something you didn't know before, do me a favor. Share it with a sibling, a neighbor, a friend from church. Anyone over 65 who might be sitting on money they don't know exists. A lot of seniors don't watch these videos themselves, but they'll listen if someone they trust sends it to them. Drop a comment and let me know if you're planning to apply, or if you've already gone through this process. Your experience could help someone else watching who's on the fence. And if you want to stay ahead of the next CRA rule change that could affect your retirement income, hit subscribe, because these updates come faster than most people realize, and I'll keep breaking them down in plain language right here. Take care of yourself and go make that appointment with your doctor this week.